Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
About 2 minutes away from the end of the trading day, Katie Greifeld and Sonali Basak counting it down to the closing bell, here to help take us beyond the bell with a global simulcast, that is. Joined now by Massar and Jess Menton. We bring together all of our audiences, television, radio, YouTube, etc. And Carol, if you take a look at the markets, both stocks and bonds, feels like we're in a little bit of a holding pattern.
Yeah, absolutely. Well, I think we're all still taking a breather coming off of Jackson Hole, getting ready for the data dump, if you will, in the United States. Having said that, you want to find some outperformance, guys. I don't know if you've looked at the banking sector. You've got the KRE, the regional banking ETF. It's up about 1.5% today. And if I look at the KBW Bank Index, it's up about 1.25%. So we're definitely seeing some outperformance among the financials. Is it because of higher rates? And they can, I don't know, but that can also be problematic. So anyway.
I thought you were going to go to China.
Stay tuned. I have my gainers coming.
Okay. I have to point out, even though it seems like a very summer doldrum type of day, the S&P 500 hanging on to these gains, that would mean its first back-to-back gains in August, if you can believe that. So that's something, even though we are just marginally higher, something I've been keeping my eye on.
There's a lot of assets trading range-bound. You look at not just the S&P now cooling off before Labor Day. You finally have kind of a top there in treasuries for now. And then you also have oil also just fluctuating between 79 and 80. The VIX even cooling just a little bit here. It feels a little like the calm before the storm.
Calm before the storm. We'll see what tomorrow brings and the next day and the day after that. But you take a look at how we're settling up right now, about 13 seconds to go. The S&P 500 actually finishing a bit higher here, 0.6% or so. That is close to session highs. You take a look at the NASDAQ composite doing a little bit better, going to finish about 0.9% higher. You have the Dow Jones Industrial also getting in on the action. Carol, going to finish up about 0.6% higher on this Monday.
All right, so on this Monday, though, Katie, you dig a little deeper into the S&P 500. Yeah, we're seeing some broad-based buying, although I know we're going to break it down into it because some of the moves are really slight. But nonetheless, you've got about 419 names in the S&P 500 actually tracking some gains on this Monday. 80 Sonali to the downside, 4 unchanged.
Yeah, let's take a look at those sectors, too, because you do finally have some love over at the semiconductor index. That is your biggest gainer today on the S&P 500. It is up more than 1%, more than 1.3% really. Media and entertainment also up more than 1%. You are looking at just a couple decliners here. Insurance and utilities slightly down on the day, but pretty much flat. Mostly green on the screen, guys.
All right, so that's your major industry groups on this Monday. Let's get into some of the individual gainers. And I think you guys have probably been talking about it. Everybody's been talking about it. 3M, top of the S&P 500, your number 2 gainer, finishing just off its highs of the day, but still with about a 5% gain. Bloomberg News reporting the company has tentatively agreed to pay more than $5.5 billion to resolve more than 300,000 lawsuits claiming it sold the U.S. military defective combat earplugs. So settling some litigation overhang, if you will. Analysts saying the agreement could remove that overhang on the stock, and investors certainly seeing that that's the case by sending the stock up more than 5%. Hawaiian Electric, man, soaring today, up 52% at its highs, finishing the day with about a 45% gain today. This is after the utility basically pushing back against a lawsuit that was filed by Maui County that accused the company specifically of starting the deadly Lahaina fire, suggesting the county's fire department may be responsible for actually losing control of the blaze. Basically, they're saying that the second blaze that swept through the town in the afternoon started hours after Hawaiian Electric, their power lines in the area had been turned off. So the utility putting that out in a statement. And so that certainly sent that stock higher. But I should point out that the stock is down roughly 70% year to date. And then, Katie, as you teased.
Thank you.
You're welcome. Thank you, actually. The NASDAQ Golden Dragon China Index up about 2.25%. So some outperformance there, rallying. But keep in mind, the CSI 300 overnight was up about 5.5%, lost most of those gains. Chinese authorities basically trying to get investors interested once again in the Chinese universe and financial universe. It's really hard. They've got a lot of problems, slowing growth, concerns about the property market. Foreign funds extending what's set to be record outflows from China this month. So investors continuing to pull back, although we did see a little pop in today's session, certainly here on that Dragon China Index, as Chinese authorities continue to try and make investors interested in the market, Jess?
I unfortunately have to take the decliners. So the losers of today, so Novacure, have to point this out. You look at that stock, it's down about 38%. So this is worst day since June 6th. And this does come, the company did say that a late stage trial of its ovarian cancer drug didn't meet its primary endpoint of overall survival at its final analysis. It's the biggest drop, obviously, like I said, in about almost 3 months, actually. And then software company CrowdStrike, you take a look at that stock, it's down close to 4%. So that actually did fall after Morgan Stanley did downgrade it to equal weight from overweight ahead of actually its earnings results on Wednesday. So keep that in mind. And then among some of the biggest decliners in the S&P 500, Bio-Techne, that's down about 2%. So another decliner to keep an eye on today, even though we had obviously more gainers.
All right, let's get to the bond market. Interesting to see a little bit of love come back into the Treasury market after some pretty relentless selling, especially at the long end. You start with the front end there, 2-year yields falling by about 3 basis points. That's all the bulk of the buying. You did see, though, the 10-year yield also fall by, we can round that up, 2-3 basis points. And the buying dissipate a little bit. You go farther out the curve. Interesting to see the 2-year get the bulk there. Again, it's an August day, so I don't want to make too much out of this. But this is one of the first trading sessions we have after we heard from Jerome Powell at Jackson Hole on Friday. And it seemed like a pretty neutral speech overall. I was in Europe, so not exactly paying attention, but seemed like reading the reactions pretty neutral.
Wait,
but
is that a travel name drop, kiddo?
I was having a great time, just so you guys know I wasn't here, but I did tune in to watch a little bit of Jerome Powell.
No,
Again,
you didn't.
A little bit. It didn't seem like he tilted any such way, but you look at the price action today, maybe being interpreted a little bit dovish.
It was a quick speech. I guess you could have too.
It had
Was
something for
longer than
everybody.
8 minutes, though, last year.
It was. It's interesting. We talked with our Michael McKenzie earlier, who watches the bond market and rates. And what did he say? Basically, this idea that Jay Powell, coming off of Jackson Hole, has investors and the trading community exactly where he wants them, and basically a lot of doubt about not quite sure what's going to come next. And maybe the Fed could continue raising rates. Maybe they pause. It's like where he wants them.
Yeah, I was going to say exactly where he wants them is apparently in limbo. And one thing that has been interesting is the expectations for next year. The one thing he was very clear about is the fight is not over, and that means higher for longer. Now, how much higher for how much longer, that is what's in flux, but no more forward guidance when you look at least this speech and anything he might be saying ahead of us.
I know everyone's looking ahead to, obviously, Jobs Day on Friday, and then the Fed's preferred gauge for inflation with PCE on Thursday. But also on Thursday, we're getting Lululemon earnings. So I want to know, are people still willing to pay $100 for some of this athleisure wear, and what that really tells us about the consumer? So I'm focused on that later in the week.
As long as they're not transparent, I'll buy it.
I do love Lululemon, though. It is interesting. We do get a lot of economic data this week, and it feels like that's really going to be the focus from here, because even though we do have Lulu coming up, really feels like the bulk of earnings is behind us. We don't get the Fed meeting until a little bit later in September. So what's left? We really just have the data to look forward to and drive the price action.
Yeah, jobs certainly a focal point here in the United States, but I'm thinking about the PMI numbers that we're going to get on China, on Europe, really around the world. And I think that'll be really important to get an idea of what's going on globally. I mean, we've got to remember it's a global economy, and while everybody's going to maybe do things a little bit differently based on their domestic economy, it all impacts one another.
Yeah, it's for sure that things are going to get a little more complicated after Labor Day, because this idea of divergence among central banks across the world will impact pricing everywhere. And then even in our own data, there's a lot of discrepancies, and there's a lot of tea leaves to read in between the lines. I know Friday I'll be watching wages, for example, because there are a lot of questions about that persistence of wage price increases.
Exactly, and what that means for the path and the endurance of inflation from here. But it is an interesting point that you raise about the different problems that are starting to face these different developed market central banks. Of course, the set of issues that the ECB is dealing with is now sort of breaking away from what the Fed is dealing with. We saw these central banks moving in lockstep for much of the past 3 years or so, but now we're at the point of the cycle where we're starting to see some divergence here, Jess, and that's what's really interesting to me.
I just want to point out from a technical perspective, some of the near-term resistance that technicians are watching is 44.40. We closed around 44.33 today, so getting closer to that, so I'm going to be focused on that tomorrow.
Guess what, guys? We're just about 6 weeks away from the next earnings season. Katie, that's just for you.
How far away are we from Christmas. Do you have that? off the top of your
No,
head?
I'm an earnings-focused kind of
It's
gal.
months away.
All right, guys, that's a
a while.
wrap. Katie, hope you feel better.
Thank you.
All right, that's a wrap. Our cross-platform coverage on the markets, radio, TV, YouTube, Bloomberg Originals. We call it Beyond the Bell. We'll see you again tomorrow.